Hi guys, welcome back to Kiwi Investments. Just realized that this is the first video I'm doing without a full-on beard. But anyways, let's keep going. Today's video is gonna be about dividends, because everyone loves dividends. I'm briefly gonna touch on tax because tax is important when you're receiving dividends. You may not be getting the full dividend amount if you're neglecting tax. And I know talking about tax is boring, but I'll keep it brief just for you to get a basic understanding of it, when it comes to dividends at least. And if you love dividends, then you must have come across this dividend table on the NZX. I remember when I was a beginner, I had no idea what this table was showing. None of this made sense to me and it was confusing. And I still don't see anything out there that makes a table like this easier for beginners to understand it. So that's the purpose of this video, to give people that help that I didn't have when I was starting off. So let's get straight into it. First of all, what is a dividend payment? To keep it very short, a dividend payment is when a company decides to share its profit with the shareholders. Some companies pay dividends and some companies don't. And if a company has a history of paying dividends in the past, it doesn't necessarily mean that they will continue to pay dividends in the future. So if you want to find out if a company pays a dividends, you can go to the company's website, into the investor page and find out, or you can come to the NZX website and find out, which I think is much easier. So let's turn this camera around and go through the dividends table that's on NZX. So once you're here, you can type in the company that you want, or you can type in the code. And you click on the ordinary shares. And on the left hand side, you'll see dividends. If you don't see this, that means you would have clicked on the overview. If you see this instead, don't worry, just click on ordinary shares. Then you'll see dividends on the left side. As you can see, they have no dividends coming up. And in this instance, that's because they haven't announced whether they're going to pay dividends this year or not. But we'll stay here and go over this table. The first column is the code for the company. So for Z Energy is ZEL. The second column is the ex-dividend date. Now this is important because you have to be the shareholder of the company before the indicated date if you want to receive the dividend payout. If you buy into the company on the ex-dividend date, then you will not get the dividend payout. On the other hand side, if you are a shareholder and you sell your shares on the ex-dividend date or after the ex-dividend date, then you will still receive the dividend payout. The next column is the period. Depending on how often the company pays dividends, you can get multiple interim and a final. So in this case, Z Energy pays dividends twice a year. But if you look at, let's say, the New Zealand Bond Fund, last year they paid 1, 2, 3, 4. They had 4 dividend payments. Let's go back to Z Energy. The column after that is the amount. So this is the amount in cents that the company pays out for each share. So in this case, Z Energy will pay 16.5 cents per share that you have. And I'll show you an example of this later because I actually did get paid this dividend. The next column is the Supp. Supp, bro. Supp is the supplementary amount in cents per share. Now this part is just for non-resident shareholders. Supplementary dividends is paid to non-resident shareholders to offset effects of double taxation. This is where non-residents is subject to both company income tax and non-residential withholding tax, or NRWT I think it's called. So this is just for non-residents only. The next column after that is the imputation in cents per share. Now, imputation works kind of the same as supplementary, but for New Zealand residents. Now, this is where I'm going to start talking about tax. When a company makes a profit, they had to pay tax on that profit. Company's tax rate is 28% at the time of making this video. Now, as I said earlier, dividends is the company's profit being shared among the shareholders. But when a company distributes the dividends, that gets taxed at 33%. When a company declares dividends, it gets taxed at 33%. So an extra 5%. That 33% tax on profit is paid by the company at the time it declares the dividends to the shareholders. So imputation is basically what the company has paid in tax. This is attached to your dividend that you receive so that you can claim a tax rebate. If your tax rate is less than 33%, so if your personal tax rate is less than 33% at the time of making this video, if your income is less than 70,000, then it's very likely that your tax rate is less than 33%. Then you can apply to get some of that tax back during the annual income tax return. Because the company has paid 33%, but your tax rate is less than 33%, then you can claim a tax rebate. Now you do have to apply for it. It doesn't happen automatically. Tax return for your normal wage or salary income and your interest that you receive from savings accounts in banks, they get calculated automatically. But for dividend rebates, it works a little different and you have to apply for it. Don't worry, when it comes close to the time, I will do mine and I'll make a step-by-step video on what you need, what to calculate, and what form to fill out. It can be a pain. Now, if you've only been using Sharesies, then it would be easier because they calculate everything for you and send you a tax summary document to your email, which is amazing. But if you've been using ASB Security like I have as well, then it involves a few extra steps. If I confuse you, all you need to know is that depending on your tax rate, your dividends might be taxed in a higher rate, and you can claim some of that tax back during the tax return. And I'll make a separate video on how to do that. Let's keep moving on. The next column is the payable date. This is the date you should receive the dividend. The next column after that is the currency which the dividend will be paid as. Now let's put all this into an example. So let's get this and put it into an example. So here we are. This is the dividend payment that we were just talking about. So I got this paid on the 10th of December 2019. As you can see, the payment date as indicated is 10th of December 2019. The dividend payment was $0.165 per share. Same as indicated here, 16.5 cents. So at that time, or I should say before the ex-dividend date, I had 900 shares. Now if you want to calculate this, 0.165 cents times 900 shares, it should equal to $148.50. Press enter. There you go, $148.50. Now this is the imputation tax credit that I was talking about, which is attached to the dividend payment. So basically this is how much the company has paid in tax and is attached to your dividend payment. You will need this when you're applying for a tax rebate. If you want to calculate this as well, so imputation was 6 cents, so that's $0.6417 times 900, press enter, $57.75. And if you go back, there we go, $57.75. Maths is amazing. Going back, the supplementary amount is 2 cents, but I'm a New Zealand resident, so that doesn't apply to me. And you will need this figure and this figure when you're applying for a tax rebate to get some of this money back. So this is an example of what you see here, the first column. But it works the same for any other company. So this is the statement from New Zealand for the dividends. This is Fisher & Paykel. As you can see, they're all similar. Just one last thing before I go. If you want to know which companies have upcoming dividends, then you can go up here to markets, click on the main board, and then on the left hand side, click on dividends. Then you'll see all the companies that have dividend payments coming up with the ex-dividend date, amount, and all the other stuff we just talked about. Personally, I wouldn't care too much about this. I know receiving dividends is nice, but just think of dividend payments as a cherry on top or icing on the cake or whatever you want to imagine. Because just like a cake, the foundation is more important. So the company's sustainability, management, global and national trends can all influence the value of the company. And that change in value or the change in share price can be much bigger than what the company pays in dividends. So I look for good companies rather than who pays what dividends. And if a company I like does pay dividends, then I just see that as a bonus. But then again, this is my personal opinion. I am not a financial expert or advisor. Everything in this video is intended for entertainment purposes only. I should say everything in this channel is intended for entertainment purposes only, just to protect myself from any lawsuits out there. And speaking of my channel, if you want to use Sharesies to trade shares and you haven't signed up with them yet, I'll leave a referral link in the description. If you use that link, then you get free $5 from Sharesies to start trading with. It used to be $10, but now they cut it down to $5. So use that link ASAP to get yourself some free money before they cut it down even further, or get rid of the referral bonus in total. And you don't have to start trading with it straight away. By the way, I did a video on how to use that link and a tutorial on Sharesies. And I also compared Sharesies with ASB Securities, two DIY trading platforms. Those videos should pop up in your screen now. Please like and subscribe if you want more Kiwi investment videos. And that's it guys, I hope this video clears some stuff up for you and now this table all makes sense to you. Until next time, bye.